From our world headquarters in New York, Bloomberg surveillance, futures down 7, Dow futures down 61 points. Dollar yen again 93.09, stronger yen. He is the first deputy managing director of the International Monetary Fund, John Lipsky. Dr. Lipsky, good to see you again.
Nice to be here.
Much to talk about, but I think what I should focus on, you have been out front in a demand for coordination of global policy. Barry Eichengreen of Berkeley writing this weekend on the need for a new and stronger IMF. He says, quote, the IMF needs to coordinate reform of the international system. Where are we on the Lipsky path to better coordination?
Well, obviously, the G20 Leaders Summit series, we're about to have the third in a year in Pittsburgh, has represented a significant acceleration of the process of global economic policy coordination. It has been, to some degree, on an ad hoc basis, and it will be important to see going forward if this process will evolve into something more sustained. I think there is good reason for optimism in this regard.
John, when you look at Olivier Blanchard's recent report in preparation for your October Blue Book and Green Book, a real question here about getting back to potential GDP. I know the IMF doesn't do market economics as a public institution, but are you suggesting a new normal, such as what we've heard from, among others, Mohamed El-Arian of PIMCO?
Well, what we have suggested is that history suggests that in significant downturns, like the one that we have just experienced, accompanied by severe financial dislocation, that it has lasting damaging impact on economies that require time to overcome. But this will present a premium on structural policies to counteract that slowdown. The outcome isn't certain, but the tendencies are clearly worrisome and will require efforts to improve potential growth.
Is there anything specific you're going to be looking for from the G20 meeting in Pittsburgh?
Oh, yes. First of all, our growth assumptions that are consistent with recent data and show expansion of the global economy in the coming year presuppose that the G20 economies will continue to implement the stimulus measures that they have promised. I'm sure in Pittsburgh this will be one of the centers of discussion.
If you just join, oh, excuse me, Dr. Lipsky.
Go right ahead.
Well, then if you're just joining us, so it's John Lipsky, first deputy managing director of the IMF. Let me do a quick data check. A busy Monday morning. Equities, bonds, currencies, and commodities. Oil down $1.53, $71.22, and with it a modest dollar advance off DXY, 0.1%, 78.47 on DXY. Dollar yen was below a 93 handle, 92 and change. Now back above 93, 93.11. Stronger yen off of the election, and euro yen 132.94, futures negative 6. Dr. Lipsky, you also focus in recent comments particularly on your blog. I never thought I'd see a managing director, a deputy managing director of the IMF doing a blog. John Lipsky.
Times changed, Tom.
Times changed, but you're doing a blog out of Jackson Hole, and it wasn't about the hiking or the fishing. It was about securitization. This is front and center in your recent literature. Why is John Lipsky focused on a stagnant securitization market?
Well, securitization markets have assumed increasing importance as part of the credit channel to private sector activity, especially in the United States, but also in Europe, and of course it had been spreading. Securitization issuance in 2006 was about $5 trillion, and that has shrunken dramatically in the context of the crisis. As a result, there will not be a restoration of full financial health until the securitization markets are restored. Right now, in the United States, in the UK, and in Europe, those markets are being supported by public action, and even so, they're not fully back to health. This will be an important element in supporting the expansion in the next few years.
Wanted to get your thoughts on the election in Japan. According to our Bloomberg story, the yen strengthened after the Democratic Party of Japan won yesterday's national election by a landslide. The DPJ has pledged to revive an economy emerging from its deepest recession since World War II by boosting child care spending, cutting taxes, and limiting the power of bureaucrats. Is all that going to happen?
Well, we'll have to see how that's translated in practice. There have been some specific undertakings by the new government in the context of the campaign. As you can imagine, they've basically involved positive things they're going to do in terms of spending and rather uncertain criticisms, uncertain in the sense of unspecific criticisms of previous policies. All this will come together very quickly in the 2010 budget that the new government will be putting together almost immediately. And then we'll see what these policies will look like in concrete terms.
Well, one of these planks here is to boost child care spending. We know the Japanese have a very low birth rate. Is this an attempt to get it back up?
Well, I suppose, but at the same time, some tax deductions are being taken away that would accrue to some of the same families that would be receiving this child allowance. So the net effect we'll just have to see in the details. Right now, as you can see, markets have reacted in broad terms in a positive way. But again, the devil here is in the details. Let's see what kind of policy changes this will imply. Certainly in political terms, it's very profound.
John Lipsky, with your work at J.P. Morgan Chase before you joined the IMF, you did a lot of market economics, of observing the data. This is a critical question. We've seen, in a broad sense, spreads narrow. Within the idea of spreads narrowing, whether it's LIBOR OIS or BAA industrial coming in, it's got to be seen as a good sign of increasing trust. How good of a sign is it? Is it a false hope to see spreads come in? Is it too good to be true?
No, we don't think so in broad terms, but we would exercise some caution in interpreting this spread narrowing, as you point out. It's very important, but our analysis suggests that a significant portion of the spread narrowing that you've seen, not just in U.S. markets but global markets, represent a reduced sense of systemic risk rather than some new and powerful optimism about the economic outlook. The data, as you point out, are turning positive, consistent, as I said earlier, with our positive forecast for the coming year. But so far, the progress on financial markets represents the success that global authorities, the governments working together, have had in reducing investors' fear of a really serious downturn or more serious disruption to financial markets. That's the positive, but there's more work to be done.
John Lipsky with us, and he will continue with us through this half hour. Much. Folks, this just in from NATO and our Jim Neuger out of our Brussels News Bureau. General McChrystal has released his report on the situation in Afghanistan. He calls it serious and deserving, says, but success is achievable and demands a revised implementation strategy. Ken and I will be speaking with Anders Rasmussen, Secretary General for NATO, later in the program. We continue with John Lipsky, though, of the IMF. Dr. Lipsky, a busy IMF on Friday with assistance to Peru in the form of $740 million in SDRs to provide liquidity to Peru. You go to Istanbul in October for the meetings. What do you hope to accomplish in Istanbul for the nation's so troubled, so fragile financial systems?
Well, there are several issues that will be important both at Pittsburgh and then following on in Istanbul. Most important, as I've mentioned already, is the commitment of the major economies to provide additional support and stimulus for their economies to ensure the expansion in 2010. In addition, it's clear in the longer term that we're going to need to start laying out the exit strategies that will reverse the massive fiscal stimulus that has helped underpin this turnaround and start to lay out the course that will bring us back to a more sustainable pattern of growth and more sustainable policies in the long run in our economies around the world. At the same time, there's additional challenges for the IMF and other international institutions to adjust their governance patterns to reflect the shifting relative economic weight of various areas and countries around the world, to make sure that these key institutions that are the benchmark and the foundation of international economic and financial cooperation are viewed as legitimate and effective. by all the major players around the world. These are all very large items and they won't be solved at Istanbul, but we need to make some additional progress. Moreover, the additional resources that you alluded to that have been provided to the international institutions still in some sense need to be finalized, and hopefully in Pittsburgh and Istanbul we can put the final touch to many of these measures. What you just mentioned reflected the $250 billion issuance of special drawing rights or new reserves to our member countries that was formalized just last Friday.
Well, you mentioned a commitment to further stimulus at the meeting in Pittsburgh. At what point does that become inflationary?
Well, that's going to be, for sure, is going to be an important issue as we move forward. Right now, as I'm sure you've discussed many times here, the major economies are very far below their potential. Unemployment rates are still going up. Inflation is not the immediate near-term threat. But for sure, we have placed a lot of attention on the need to start to elaborate the kind of strategies that will avoid inflationary or other distortional outcomes in the years to come. Very specifically, we are publishing a fiscal monitor at the behest of the G20 economies to track their both implementation of stimulus, but also to make clear the challenges in the longer term to get things back on a better balance.
Well, Dr. Lipsky, thank you so much. Of course, the first deputy managing director of the IMF, with a busy travel season coming up for Dr. Lipsky as he moves to Pittsburgh and on to Istanbul.